truth no one wants to hear. Imagine working your whole life, saving every penny, trusting the system, only to wake up one day and realize the game was rigged from the start. The rules, they weren't made for you. The opportunities, snatched before you even saw them. While you were playing fair, someone else was playing smart. And now they own the board. The markets are shifting, the tides are turning, and the biggest players, they aren't waiting around. They're making moves, massive, calculated, unstoppable moves, the kind that changes everything while the rest of the world is still asleep. Today we're talking about something nobody wants to admit, but everyone needs to hear: how greed has reshaped the economy, how the smartest investors are making their biggest cash grabs ever, and how you can learn the lessons hidden in the chaos. Stay with me. By the end of this, you'll see the world differently, and maybe, just maybe, you'll start playing the game the way it was meant to be played. The illusion of fair play. From the moment we step into the world of money, whether it's earning our first paycheck, making our first investment, or simply trying to save for the future, we're told a story, a comforting, reassuring story about how the financial system works. We're taught that hard work leads to wealth, that if we play by the rules, success is inevitable. We hear about the power of persistence, the importance of education, and the magic of compound interest. We're told to invest early, stay disciplined, and trust the system. The narrative is designed to make us feel in control, as if our outcomes are entirely in our hands. But here's the harsh reality. The system isn't broken. It was designed this way. For decades, the markets have been shaped by those who understand the rules at a deeper level, those who don't just follow them, but bend them, manipulate them, and rewrite them in their favor. It's not about luck or even intelligence. It's about access, knowledge, and most importantly, power. Look at the financial crises of the past. Every single time when markets crumble and economies shake, who loses the most? It's never the ones at the top. It's the middle class, the everyday investor, the person who played by the book and believed that a diversified portfolio and steady contributions were enough to weather any storm. Meanwhile, the wealthiest individuals, the institutional investors, and the biggest hedge funds not only survive, they thrive because they don't play the same game as you. While the average investor panics during downturns, these players see opportunity. When retail traders follow the latest market trend, they're often unknowingly buying into something that the smart money is already exiting. What's sold as financial advice to the public is often just a strategy for the powerful to keep control. Consider this: who sets interest rates? Who decides how much money gets printed? Who controls the narratives that dictate stock prices? These decisions aren't made in the interest of the average worker or investor. They're made to preserve and expand the influence of those already in power. Think about the stock market itself. The biggest financial institutions have access to high-frequency trading algorithms, private information, and political influence that allows them to stay ahead of trends before they even happen. Meanwhile, the average investor is reacting to news that's already priced in, trading on emotion, following the herd, and often making decisions based on narratives designed to keep them exactly where they are. The illusion of fair play isn't just in the stock market. It's in real estate, banking, corporate finance, everywhere money flows. We're told that buying a home is the American dream, yet the very people selling this idea are the ones who profit the most when we take on massive loans and spend a lifetime paying interest. We're told to save diligently, yet inflation and taxation eat away at those savings faster than most people realize. We're told to work hard and climb the corporate ladder, yet those at the top aren't climbing. They're owning the ladder and deciding who gets to climb at all. The hardest pill to swallow is that it's not about fairness. It never was. For years, we were told that cash is dead, that holding money was a fool's game, that the real winners were the ones investing aggressively, leveraging debt, and chasing high returns. And for a time, that was true. Low interest rates, easy credit, and endless liquidity made it seem like there was no point in sitting on cash. Every dollar in your bank account was losing value while assets skyrocketed. Then everything changed. Markets started to shift. Interest rates climbed. Inflation hit harder than anyone expected. Suddenly, the same people who once dismissed cash as useless were hoarding it like gold. The biggest investors, the ones who truly understand the game, started pulling money out of risky assets and sitting on massive piles of cash. Why? Because cash isn't just money, it's power. When markets are soaring and credit is cheap, everyone feels like a genius. But when the tides turn, when debt becomes expensive and asset prices start to fall, cash becomes the ultimate weapon. It gives you the ability to move when others are stuck. It allows you to buy opportunities at rock bottom prices while everyone else is panicking. It separates the players from the played. The wealthiest individuals and institutions don't just sit in cash for no reason. They wait, they watch, they let the market come to them, and when the time is right, they strike, buying up assets at a fraction of their previous value while the rest of the world is scrambling to survive. This isn't speculation. This is a cycle that has played out time and time again. The 2008 financial crisis, those who had cash bought distressed assets and built generational wealth. The COVID crash, the same thing happened. Liquidity dried up, and those who had cash were the ones who dictated the future. Right now, we're seeing the same playbook unfold. Big money is getting liquid. They aren't playing the short-term game. They're positioning themselves for the moment when everyone else is forced to sell. And when that moment comes, cash won't just be king, it'll be the entire kingdom. Markets don't move because of logic. They don't rise and fall based on fairness, ethics, or even long-term fundamentals. They move because of one thing: greed. Greed is the invisible hand that pushes prices higher, fuels speculation, and drives irrational decision-making. It's the force that turns ordinary people into gamblers, convincing them that this time is different, that the rules don't apply, that they can get rich overnight. But here's the truth. Greed isn't just a human emotion, it's a strategy. The biggest players in the game understand this better than anyone. They know that when the market is booming, people will blindly throw money at anything that looks like an opportunity, and they take full advantage. They create hype, they sell the dream, they make you feel like you're missing out, and while the crowd is rushing in, the smart money is quietly cashing out. Then the cycle flips. Fear takes over. Panic spreads. People who were greedy just months ago suddenly start selling at any price, desperate to escape the pain. And once again, the same players who sold at the top are now buying at the bottom. It's not a coincidence. It's a pattern. Look at every financial bubble in history: real estate, tech stocks, crypto, commodities. The story is always the same. The masses get greedy. The smart money feeds that greed, and then when the market collapses under its own weight, those who created the illusion of easy wealth are the ones profiting from the collapse. This isn't speculation, it's reality. It's how the system works. And if you don't understand it, you're not playing the game you're being played. Fear is a powerful thing. It clouds judgment, paralyzes decision-making, and makes even the smartest people act irrational. When markets crash, when the headlines scream panic, when people start selling everything in desperation, this is when the real winners step in. Look back at history. Every economic downturn, every stock market collapse, every financial crisis has something in common. While the majority panics, a small group of people are quietly making their biggest moves. They aren't following the herd. They aren't emotional. They aren't reacting. They're waiting patiently because they understand one of the oldest, most unshakable truths of wealth. The best deals don't come when things feel good. They come when everything looks hopeless. When the average investor is dumping stocks, the smart investor is buying them at a discount. When real estate prices plummet and homeowners are desperate, those with cash are scooping up properties at once-in-a-lifetime prices. When businesses are struggling and valuations crash, the biggest players are acquiring assets for pennies on the dollar. It's not about luck. It's not about timing the market perfectly. It's about having the courage to move when others are frozen in fear. Most people won't do it. They'll wait for confirmation, for things to feel safe again. But by the time that happens, the best opportunities are gone, snatched up by those who understood that wealth is built in the downturns, not in the booms. In a world obsessed with speed, where everyone wants results right now, patience has become a rare and underrated skill. The market rewards those who can wait, yet most people are too distracted by short-term noise to see the bigger picture. The greatest investors, the ones who build real lasting wealth, aren't the ones chasing quick profits or trying to predict every market move. They're the ones who understand the value of time, who know that opportunities don't appear every day, but when they do, you must be ready. Patience isn't just about sitting still, it's about strategic inaction. It's knowing when to hold, when to watch, and when to strike. It's resisting the temptation to jump into every trend, every hype cycle, every short-term game. Think about the investors who bought stocks during the worst crashes in history. They didn't get rich overnight. They endured years of volatility, doubt, and fear before their patience paid off. The difference, they knew that timing is the greatest advantage of all. The market is a transfer of wealth from the impatient. Most people can't wait. They panic, they sell too soon, they chase the next big thing. But those who master patience, they build fortunes while the rest make mistakes. If you want to know where the next big opportunities are, don't listen to what people say, watch what they do. The wealthiest investors, the biggest institutions, and the smartest money managers aren't making random decisions. Every move they make is calculated, strategic, and designed for long-term gain. When markets crash, the media tells you to panic. But where's the smart money flowing? When asset prices soar, retail investors rush in. But who's quietly selling behind the scenes? The truth is, the game is rigged in favor of those who understand the flow of capital. Big money doesn't follow emotions, it creates them. It builds narratives that make the masses buy at the top and sell at the bottom. It manufactures hype, pushes trends, and then exits before the collapse. The key to success, stop chasing headlines and start following the money. Look at where billionaires are investing. Watch where institutions are positioning themselves. Pay attention to sectors that are quietly accumulating capital before the public catches on, because by the time you hear about an opportunity on the news, it's already too late. The market doesn't care about your feelings. It doesn't care about your past successes, your hard work, or your best intentions. It only rewards those who adapt. Every economic shift, every financial crisis, every technological breakthrough creates two types of people: those who evolve and those who get wiped out. The investors who refuse to change, who cling to old strategies, who believe the game will always work the way it used to, they don't survive. Look at history. The ones who thrived weren't the ones who played it safe or stayed stuck in the past. They were the ones who saw change coming before the rest of the world. The ones who embraced new industries, shifted their strategies, and positioned themselves for what's next. The market is ruthless. It punishes those who hesitate. It rewards those who move with it. So ask yourself, are you adapting or are you waiting to be left behind? Most people fear risk. They see it as something to avoid, something dangerous, something that could wipe them out. They are told to play it safe, to follow conventional wisdom, to stay within the lines. But the truth is, the greatest risk of all is doing what everyone else is doing. Risk isn't what people think it is. The average person looks at investing in a downturn and sees danger. They see falling prices, volatility, uncertainty. But the smartest investors, they see opportunity. They know that the best time to buy is when fear is at its highest, when others are too paralyzed to act. Meanwhile, what most people consider safe is often the most dangerous path of all. Keeping money in a savings account, losing to inflation every single day, following outdated financial advice, watching your purchasing power shrink while those who understand the game grow their wealth. Sticking to the same strategies that worked in the past, ignoring the fact that the world is changing faster than ever. The real winners don't fear risk. They manage it, control it, and use it to their advantage. They understand that every investment carries some level of risk, but the key is to make calculated moves rather than emotional ones. They don't wait for certainty, because by the time certainty arrives, the opportunity is long gone. Look at history. Every major financial shift, every technological revolution, every new wave of wealth creation was fueled by those who were willing to embrace risk while others hesitated. The ones who invested in real estate when markets crashed, the ones who bought stocks when everyone else was selling, the ones who backed new technologies before they became mainstream. Risk isn't about gambling. It's about understanding where the real dangers lie, not in taking still while the world moves. The wealth gap is no action. The gap between the rich and the poor isn't a coincidence. It's not just a result of hard work versus laziness, intelligence versus ignorance, or even luck versus misfortune. It's by design. The financial system was never built to create equal opportunity. It was built to favor those who understand its inner workings and punish those who don't. The rules of the game are written in a way that ensures wealth flows upward, consolidating power in the hands of a select few while the majority struggle to keep up. Look at how money moves. The wealthy don't just earn money, they make it work for them. They invest in assets that appreciate over time. They use debt strategically, leveraging other people's money to build even greater wealth. They have access to information, advisors, and networks that the average person will never be privy to. Meanwhile, the middle class and working poor are trapped in a cycle that's nearly impossible to escape. They're told to work harder, to save diligently, to invest in retirement accounts that won't provide real security. They're burdened with debt, not the kind that builds wealth, but the kind that keeps them tied to their jobs, their bills, and their financial limitations. Inflation eats away at their savings. Taxes take a larger percentage of their income, while the ultra-wealthy use legal loopholes to protect theirs. The stock market crashes, and while the rich buy assets at a discount, the average person sells in fear, locking in their losses. This isn't an accident. It's how the system maintains itself. Those who have wealth gain access to even greater opportunities, while those without it struggle to catch up. Financial literacy isn't taught in schools for a reason. If everyone understood how money really worked, the entire structure would collapse. Every economic downturn, every crisis, every shift in the market creates another massive transfer of wealth. And every time, the same pattern plays out. Those who are prepared capitalize, while those who aren't get left behind. The market doesn't move on numbers alone. It moves on stories, emotions, and carefully crafted narratives. The people who control the financial system don't just invest money, they invest in shaping public perception because they know that belief drives behavior and behavior moves markets. Think about the cycles of boom and bust. Every time a bubble inflates, there's a story behind it, one that convinces people that this different, that prices will never fall, that the opportunity is too good to miss. These narratives aren't accidental. They are designed to attract capital, to bring in retail investors, to create momentum. The same thing happens in downturns. Fear becomes the dominant emotion. The media fuels panic. Investors who once believed in long-term growth suddenly start selling at massive losses, convinced that the market will never recover. And who is buying during this chaos? The same institutions that helped create the fear in the first place. It happens in real estate, stocks, commodities, and even entire economies. The housing market crashes and suddenly massive firms are buying homes in bulk at deep discounts. A company's stock plummets due to bad news, only for insiders and major funds to start quietly accumulating shares. A new industry is hyped to the sky, pulling in billions before the inevitable crash wipes out those who entered too late. The key players in the financial world don't react to narratives, they create them. They know how to push a message, how to influence public sentiment, and how to move the masses in the direction that benefits them most. They use data, media influence, and strategic timing to position themselves ahead of the curve. Most people don't realize they're being played. They think they're making independent decisions when, in reality, they're following a script written by those who understand how money moves. By the time the public catches on, the real profits have already been made, and a new story is being prepared for the next cycle. Understanding this is the difference between being a participant and being a pawn. The market isn't just about numbers, it's about psychology, perception, and the power of controlling the story before anyone else even realizes they're part of it.